This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, October 28th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets are December corn up 2 3/4 at 431.5. November soybeans were up 10 at 1077.25, and December Chicago wheat was up 5 3/4 at 531.75. Government's still shut down, so we've got no export sales announcements to bring to you. We're through 19 of 23 days settlements on the harvest price discovery period. Corn is locked in right about 420, and soybeans are 1024. We've got 2 days to go before the big meeting between President Xi and President Trump. By all accounts, that meeting's still on pace to take place. Harvest seems like we're on the back end, finishing up upper 80s for corn and beans by private estimates. Still, hearing of multiple guys starting to wrap up, which is a good sign. Weather still looks pretty friendly for a majority of the belt to get the last pieces done there, so that's good. And the Fed begins a 2-day meeting here today. Markets expecting a quarter-point cut. So we'll have to see what they announce here later this week. With that, Dustin, continue to see follow through here overnight, and certainly from yesterday's exciting session, certainly in the bean complex, bumping up into some pretty good technical levels on D's corn as well. So I guess what are your thoughts here as we start the morning?
Yeah. Good morning, Dan. Yeah, it's we're definitely in potentially a much different market. All the things that were headwinds, China mainly, could be tailwinds here coming up. I mean, we do non-free market agreements like the phase 1 trade deal. Anything goes. And I think what's probably different this time around is if a deal is signed, I think the market's going to take it. This is my personal opinion. The market's going to take it a whole lot more seriously than they did back in 2020. There's a large portion of 2020 where everyone kind of downplayed the Chinese deal as never going to happen. And to Trump's credit back then, he was patient with them, and they did come in. They came in as the world's largest buyer of corn overnight. They never really bought more than 7-8 million metric tons and only on a very short year. Most of the time that was zero, and they came in well above 20 million metric tons in that first year. So just want to keep that in mind. This is, I put it in our letter last night. This is the first time that we've been above the 18-month moving average on beans, front month beans, for a long time. And you get situations like this where I'm not huge on technicals, but I think that one of the things that has been true over the course of my career for beans is that when beans start to make new highs that we haven't seen for a long time, they tend to move in dollars, right? They move a lot faster than people think, and it could be that we have 18 months of positions that are starting to now be in the red if you're on the short side, right? So if there's been a very comfortable short for a long time, that could get quite uncomfortable if we start seeing 5, 10, 15 million metric tons of sales come across to China with an extremely low soybean acreage number this year. We don't know what the yield is, but a dry finish to the year too. So something just to kind of keep in mind is we this will be the first monthly close above that since summer 2023. And, last time that happened after years of being below the 18-month average was 2016. And we had a pretty quick washout of shorts, that time around. And I think the market was surprised by the narrative change.
What's your thoughts on corn spreads?
So I think interestingly, river levels are still kind of low for like Memphis. Projections are still low. We haven't had any sort of competition for corn through bean exports because of the lack of China. If China comes in and starts doing a bunch of business, now all of a sudden barge freight is in higher competition. That may justify why corn spreads broke yesterday, is that, we are going to be running against the South American crop, right, for non-Chinese business especially. And, that might justify why corn spreads started to break, even though we've announced China as a buyer. So I still think you have a huge, most number of corn acres since the 1930s that we're going to have to contend with that. If China's buying a bunch of corn and, shipping it downriver, that certainly helps. But, I think that it's going to be a bean story for the next couple of months if China really does come on board, and that may actually widen corn spreads for the short term.
Ben, what's on your mind this morning?
The chart looks phenomenal. Above all major moving averages, it broke out of the consolidation that we had talked about for a long time. Right now, it feels like maybe some stuck shorts going into delivery. I think this week, again, volatility is going to pick up, particularly in soybeans. And I think you have to, we've talked before in here about the turns being hard. Well, I think we just had one. And unless we, trade negotiations just have a yard sale between now and them meeting and getting this done, there's a lot of people I think that are on the wrong side of the bean trade right now. We talked about trading the continued narrative and the market not rewarding people. So I'm fairly optimistic. I hope that the details of the agreement are robust and support higher prices. But that, I guess there's some perception in there and probably a different degree of expectations. So I think the market I think beans are going to stay really volatile. And, to Dustin's point, I think it could be for a while. Volatility is not straight up. Volatility is a market that's moving in both directions wildly. So I think that's good. I think it gives opportunity, and it makes next year's planning rotation get a much closer look, especially if we continue to do good corn business and thin the stocks out there a little bit, which, again, we don't even know what final yield is. So, yeah, I like it.
Yeah, it's not looking like we're going to get a November report unless they hurry up and figure something out, which doesn't seem like they're getting any closer. Justin, what are your thoughts after you've seen, a couple sessions here? I know it's devil's going to be in the details. I thought you said it pretty good yesterday. And I think your tempered response to it was well taken by a lot of folks because, it could be one of those deals. Like, are they going to go fill the gap by a few beans to appease some people? And then, we're kind of back at square one,
Yeah. I mean, just kind of adding to what Ben and Dustin are talking about, I think to play the other side of that a little bit, July beans, for example, are at 15-month highs. You're at 11.30. We're not cheap. So, my opinion, you have wide spreads, and you've had a flat price rally. So if you are guys storing beans to go sell 11.30 July beans, for example, buy some shorter dated calls to see how this plays out. I think vol's extremely cheap, what we talked about a lot. There's just a lot of stuff to do here. So I don't think you also just can't look at 15-month highs and shrug them off as like not an action point. So yeah, I agree. Chart looks great. We're busting out of a range that we've been talking about for a long time, trading sideways in a big range. And when markets break out of those ranges, they can really go. So, I would also be, any beans I'm selling, I would be buying calls for sure to see where things can go. But I also don't want to lose sight that we are at, 12 to 15-month highs too. Yeah. And a lot of guys with record bean yields. So
right. Yeah.
You're kind of getting your cake and you can eat it too. So I don't want to lose sight of that.
Yeah. Revenue numbers have changed drastically in the last 48 hours for a lot of folks. I mean,
yeah,
it's crazy. Justin, I had a question a couple of times yesterday. And I know we got a long way to go, but like you start looking out to November of 26, back at $11 or so, and coming off of 98 quadrillion corn acres this year, like what is that expensive? Is like, what's your opinion out there?
Yeah, I mean, you look at like the corn bean ratio out there is 2.35, right at the long-term average of where that ratio should be. So, I made the comment yesterday about new crop corn, I think being exciting because, if you have a bean program out forward, you go back to a normal type rotation, right? So so at 2.35, it's not remarkable one way or the other. It's average, right? But I do think we're gonna, but again, if we're picking up more bean acres because we have China back buying beans,
it's different. Yeah,
it's just kind of in balance. I think guys like me were scratching our heads with what to do with new crops, because if China's absent, you just have too many acres. If China comes back and a deal, whatever that looks like, if a deal is just not avoiding U.S. beans going forward, then at least it starts putting some more balance back in our markets. When you have China not buying, it's you've got to, like we talked about in the show, you got to figure out how to use, which I still think we need to do, because you can't be determinant on China, in my opinion. You have to figure out more renewable diesel and more ethanol, just more domestic use, so that you're not in this position going forward. But
so if you let's say you get China back online, whatever that means. I mean, you throw numbers around, get them back online, but then like kind of gets a lot more exciting if you start figuring out 45Z and getting some guidance on that, because now you've got some competition for having to hit those numbers, and the crush numbers that we've had setting records every month. So
yeah, I mean, look at like China, like at least the talks are, they're going to delay the rare earth export controls for a year. Well,
right.
It's a year, right? I mean, I kind of view this as like, this is a Band-Aid for the bean market, and we better figure out something longer term. Okay, like I said, okay, fine, hold China's feet to the fire, make them buy, I don't know, 10, 15 million tons of strategic reserves. Well, that's a Band-Aid, right? You better figure out some way to use beans going forward, in my opinion. I think there's a decoupling that's obviously happening here with US and China, and not necessarily in a bad way, just in a strategic way. There's, obviously certain manufacturing things that we're realizing we can't be reliant. We went too far with this, outsourcing, and we've become too reliant on a big competitor in the world. And I think they probably realize the same. And so hopefully the ideal thing was that there's, really good trade that can continue to happen, and both sides just realize that there's just certain strategic things that we have to diversify away from.
Yeah, it's interesting.
I think there's a silver lining that could happen.
Yeah.
It doesn't have to be like all or none, but there's certainly some things that we're realizing on both sides, I think, that we're maybe too reliant on each other.
Well, it's and playing out in the media. I mean, you cut off trade negotiations over an ad on TV with Canada, and Canada runs to China to try to soften their negotiations. It's like so many moving pieces. Right?
Yeah, I mean, some of that's like, you got to know who you're dealing with. I mean, you go run an ad to try to like turn American voters against the administration is not going to go over well. It's the wrong guy to do that. Like, know your audience. Yeah.
No kidding. We got a couple minutes here, Rylan. You guys, I thought, did a good job yesterday. I mean, the more of the same for cattle. I guess when it's done, it's done. Not much else to say. And then pretty technical trade on hogs. I mean, it's pretty important what they're doing close to the 200-day here. So
right.
What are your thoughts?
Well, the bloodbath continues. I mean, we still have expanded limits here. We are shaking out all of the week longs here. I mean, it's been just a massive move. I mean, I think, Justin said it yesterday, when it's done, and it looks like it's done. So, I mean, open interest was down 8,200 contracts on the live side. Can only get out of 394 contracts yesterday, and feeders before pretty much every contract lock limit down. So CME is raising margins in feeders. We see this in these kind of markets, and it really does kind of force that liquidation. So I'd expect more to continue here today. On the other hand, we are seeing cash trades start to develop on the live side of the market in the north, about $8 lower from the previous week. So we've seen some 230 live, some 358 to 360 dressed. But beef prices were higher. Choice up 212, select up 369. So you're just not going to keep the beef market, any pressure on that anytime soon. So yeah, there's still quite a bit more panic here, but we've seen this in the past. The market will do this. It will freak everybody out. It will get everybody out that it needs to get out, and then it will try to stabilize. So, I mean, overall, once again, when it's over, it's over. Those with protection, I think it's a perfect time just to sit back and let everybody else kind of fight it out. There could be some really good buying opportunities or reownership opportunities down here as well with all this panic, especially when we're, trading synthetics, 3 to 4 to 12 lower. So overall, I think there's going to be some really good ownership opportunities. And I think that's what some guys should probably start to look at that are really deep in the money on LRPs, on their puts, on their sales, that kind of stuff, just because let everybody else panic right now, that didn't take advantage of this move. Anywho, on the hog side of things, yeah, just not a whole lot going on there, just still kind of grinding lower here. 200-day moving average is going to be a big area of support. So I think we probably trade in front of that a little bit. I mean, carcass was down $1.66, belly's down 253, and cash was still all lower. So you baked in a lot of really bad news here, bad sentiment, maybe putting the cart a little bit before the horse. So same kind of thing. I think this is probably a break to start looking at kind of reownership strategies down here just to see if we get any kind of recovery bounce. Otherwise, we are in that seasonal time frame where prices should be going lower. Maybe we're even seeing some spillover selling from the cattle market into the hogs as well. But yeah, it just feels like the protein markets, the narrative has completely changed just in the past, several weeks here. So yeah, still hopefully looking for some good news or some trade deal news at this point.
I was going to add to that a little bit. I mean, these are just big boy markets. Mm-hmm. You look at cattle. I mean, you look at the all-time previous highs back in 08 and some of these major levels. I mean, we're triple that. It's like right. $24 corn.
Yes.
It's massive markets. And you're going to have, whenever these giant markets end, they're going to be huge volatility.
Right.
So you look at like beans, like some of these markets, like when they made all-time highs, the moves in between getting to that, they were huge. It was like, a $4 break and then a $6 rally in beans back when we were making these new all-time highs. So it would not surprise me to see cattle just do some crazy things while you're going through this. It might even go, break 20%, rally 30%, and it could do anything.
Right. I mean, people have compared this kind of break to other breaks. I mean, you look back at 2 Octobers ago, you look at 2014, those kind of markets, it's almost refreshing to see a break straight down, just pure liquidation versus the slow grinding lower market. I feel like that's actually more difficult to deal with in the long term, where you crush volatility. You don't see those big ups and downs. I mean, we could easily, spike around here. And obviously, there's a lot of doom and gloom here. There could be some fundamentals behind this. Keep in mind that most of this price action is based purely on what the president has said. Nothing changed, right? I mean, this wasn't a mad cow situation. I mean, we haven't reopened the border yet. We're just having talks about it. We don't have a plan for reopening. I mean, there's just so many questions right now, and there was too many questions, I think, for some of the longs to say, you know what, I'm out, just get me out. And 100%. It's kind of how it's been trading.
Yeah.
So that's to Justin's point. I mean, if you got the wrong headline, you could get that 30% jump again and be like, oh my God.
We're coming off of a point where everything was stacked in the longs' favor, right? No reopening. Everything was stacked with you. Now you've got some take my chips off the table and go
it
somewhere else
was
for now. Yeah.
right. It was easy being long. You know, the best trade this, you know, up until the big break has been go sell your cattle, go buy it back in futures, guaranteed win, right? And then all of a sudden, boom, that party's over. You know, and so like now you've got a little bit more fear. You're going to have the weak longs kind of probably stay out of the market for a little while, you know, but yeah, I mean, it does feel like we're going to start to hit that big kind of volatile swings, you know.
Well,
so.
you start moving like this, like you don't realize you're the week long until you are.
Yeah, until you got to put up the extra $600 in feeder margins. Yeah. It's like, I don't have that.
Yeah.
I am
them. I am him. Yeah. So.
Very good. Thanks, Rye. Appreciate the update there. We just came into the open. December corn's up 3 3/4, 432.5 now. November beans up 10 3/4 at 1078. And December Chicago wheat up 7.5, 533 3/4. And I appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.